Good day, doctor and friends. Here I will be sharing on the growth of new type of finances and the risks related to it. What is financing? Let's understand what is financing. Financing means asking any financial institutions to lend money that is promised to repay in some point in future. The common type of financing is hire purchase, mortgage, and business expansion. Hire purchase financing is sought when a person buying a car. Mortgage financing takes place when buying a house. And for companies' business expansion, financing will also be required. Today, we will be looking into three types of financing: microfinance, peer-to-peer lending, and crowdfunding. Microfinance, as the name describes, it is small financing. It is a tool to fight poverty among the low-income group. Microfinancing existed since long time ago, but it did not succeed as a mainstream of financing. Dr. Muhammad Yunus from Bangladesh, an economist, has been trying to find a practical solution for the starving poor. He then started microfinancing by lending his own pocket money with zero interest. And then he started a Grameen Bank project, which is means by Village Bank to finance more people. There are over 6 million borrowers have been supported by this type of finance in Bangladesh itself. So this is where the microfinancing has really evolved and shown to the world that it can do help to the poor income group. Today, microfinance is available through microfinance institutions up to larger banks and has become one of the key financing type. What are the risks of microfinancing? There are many risks associated to microfinancing. The key risks will be credit risk and liquidity risk. The low income group happens to be good paymasters. Most of them serve their monthly commitment of repaying the loans promptly. Since the collection rate is good, the credit risk being managed, but it is always one of the key risks and should be monitored frequently. Next will be the liquidity risk. Financial institutions should ensure there is enough fund to distribute to the new microfinancing requirements. This will ensure a country's poverty could be further reduced. With the development of microfinancing industry, there arises competition among the financial institutions. These have further evolved the offering of microfinancing institutions towards new products such as savings, insurance, and others. Though one should always be aware that microfinancing has short repayment period and high interest rates. Next, we look at peer-to-peer lending. Peer-to-peer lending is a method of lending or borrowing money without the use of financial institutions as intermediaries. With the growth of ICT, online platform is used to mediate the transactions. The online platform is also called as marketplace lending. One could use the marketplace to borrow or lend funds. Risk associated to peer-to-peer lending. We also should take note that the marketplace is usually not regulated in most countries. Thus, it could be subject to unknown vulnerabilities. Since most of the transactions are done online, it also has less liquidity. Investors has to wait for the investors fund to mature in order to enjoy the profit. Though, since it is not regulated, a country's regulatory changes will have an impact towards how the peer-to-peer lending operates and its related profit margins. Now, let's look at crowdfunding. Crowdfunding approach is a method of raising money from a larger number of people through online platform. This is similar to peer-to-peer lending, where an online platform is used. A project is promoted through crowdfunding websites to gain investors' interest. Then the funds are collected for the particular project, though the funds could be categorized into four categories. First is donations, where the funds are given as donation without any return expectations. Second is where the fund contribution is done in return for a reward. Reward in terms of getting the product upon successful launching as free or discounted price. Third is where the funds recognized as debt or loan. It has to be returned with an interest fee. Fourth is where the lenders buy equity in the company or the particular project. The lender do not have to pay any upfront fees when seeking money through crowdfinancing. Risk in crowdfunding. Crowdfunding has its own associated risk as well. The funding request could only be done one time per project. If the target limit is not reached, then there will not be any funds given for the particular project. Though high fund requirement is always a concern on achieving its target funding requirement. Complicated projects could face a hard time to be promoted through crowdfunding websites as it would be hard to be understood by everyone. Let's see how Malaysia places itself in the three types of financing. In Malaysia, microfinance has been established long time back, that is since 1988 by Amanah Ikhtiar Malaysia. Due to the contribution of microfinance is well recognized, many financial institutions has been encouraged to provide microfinancing loans. The approval of microfinancing in Malaysia is fast, less document required, and up to RM 50,000 being offered for business purposes. As for peer-to-peer financing, Malaysia is still in the early stage in implementing this type of financing. Security Commission of Malaysia is now compiling the applicant details in order to regulate this financing type, which is expected to reach the public in 2017. Though crowdfunding in Malaysia has been started in 2015. To date, there are 6 organizations has been approved by the Security Commission to provide crowdfunding financing services. Since both these type of fundings are still new in Malaysia, it is still early to evaluate its effectiveness and risk associated with it in the Malaysian market. We have seen the three type of financing and its risk associated to it: microfinancing, peer-to-peer funding, and crowdfunding. As a borrower, all the three types of funding clearly has different type of target market. As for lender, it is always lender's discretion to evaluate the risk associated to the type of financing before investing in them. I hope my sharing has given a better understanding on the three types of financing. Wish you all a good day. Thank you.